Stock futures opened lower Tuesday evening to extend the steep decline seen earlier in the day. The reason for fear? Weaker than expected retail sales, which call into question the strength of the economic recovery. But this is nothing new, as we've seen weakness in many other areas. This is just old news. Yet the poor U.S. retail sales report from the Commerce Department served as a source of concern for equity traders. Adding to that was the decline in Home Depot shares after the home improvement giant missed second quarter same-store sales. Another reason to fear is the Chinese Communist Party stock torture that once again hit after the CCP issued a fresh set of rules that would rein in the market power of big tech companies in the country. But rather than something new, it seemed more like a retread of old, tired news. Of course, to add to fear, we can always march out the bad news of the Delta variant making its way across the country, with the exception of the Obama birthday bash where the virus is not allowed. And then on Wednesday, we have the Federal Open Market Committee release of the latest meeting minutes, which will offer more hints on when the central bank might announce the tapering of crisis area asset purchase programs. And how many times have I heard this? And lastly, we had the complete failure and collapse in Afghanistan. What a cluster that is. So, there's your list of catalysts that are on the minds of Wall Streeters, but it's mostly old news. And yet, this is nothing that another lockdown and stymie check can't solve. So in the meantime, let's take a look at the damage. Today we're going to take a look quickly at two charts, beginning here with the iShares Russell 2000 ETF, and the symbol is IWM, and this serves as a pretty good proxy for the Russell 2000. And I've said before that the Russell 2000 perhaps is the canary in the coal mine because it seems to be leading the other indices. But taking a quick look here, pretty much the important thing to take a look at is this level of 210. It looks like we've hit it once, twice, an attempt there, 3 times, and I think we're going to make another attempt here. So let's see how far down we go. Moving into the volume, that's not going to really tell us too much. The MAC kind of does. Notice here, these levels here and here and here are below zero, while this level here, here, and here are above that zero line. So it's relatively balanced in its cycle through time above and below that zero line. We're below zero right now, so it's a bit weak. So let's watch this, how it comes down here. I would imagine it might exceed that -2 level, but that's still not going to be too bad. Here in the histogram, you can see a good look at the above and below that zero line the histogram is, and the same thing here in the price rate of change. But nice cycling through here. The ups and the downs are relatively predictable. So now it just looks like we're on our way down, but I don't think it's going to be a bad ride, but we'll see. Here into the RSI, we're at a moderately weak 33.29, and once again above and below that midline or 50 level here. And then the same thing in the stochastics as well as the Williams. So we have a little bit more time on the downside, say the stochastics are telling us. Fast line heading on down here, so we'll probably come on down here and then maybe bottom right before we get to that oversold territory. Maybe once we get into it, but it's not going to be all that significant of a decline, at least as we can see from this point here. And back up to the price chart and another look before we go take a look at the weekly chart on the iShares Russell 2000. And this is now the 2-year weekly chart on the iShares Russell 2000. And this chart here is of more interest than the daily, at least to me. Let's draw a channel line here, the bottom trend line moving through there, and then the top trend line moving through like that. And the indice has been cycling through this channel line for the last several months. We're coming on down here, and if we can get that bounce off of the 210, which is slightly above that 50 EMA, it might be interesting. I'm not sure if that's going to provide that reset of the MAC as we can see here, but only time will tell. I think we're getting close. We are moving down. Both the fast line and the slow line are moving down very gently. Now, while that moves down, the MAC moves down, the price chart moves sideways. So there's a divergence going on. And I think that if we can get a reset in the MAC, some here in the next few months or so, then the rebound, the reflection on up, might prove for a pretty strong move, at least in the Russell 2000. And you can see that here in the histogram. We're trying to bottom and base here. I'd like to see a little bit of retraction toward that zero line, but that will come. Into the price rate of change, also very nice, gentle move on down, and then maybe the beginnings of a basing and bottoming here near the zero line. So there's a decent amount of strength left in this. Even though the RSI is at a moderate 41.04, I think that's still good enough. It's near that 50 line and maybe a bottom and basing here. We'll have to wait and see. I don't think quite yet, but I certainly do see the beginnings. Stochastics, pretty much the same thing. And then as well, the Williams. Very nice arc all the way through here. And we got a base and a bottoming at that point there. And so perhaps we can set the foundation here for another bottom. Moving back up here to the price chart. One last look. Keep your eye on that and compare this with the other indices if you have a knack for the charts. If not, then just wait for the next video coming this weekend. And for today, that's ChewDog Charts. Thank you.